So JPMorgan appears to be a GME long, a GME bull, whatever you want to call it. Look at their most recent filings. I'm not a financial advisor. I'm just here offering you my thoughts and opinions. But when you go on Fintel and see that JPMorgan has sold all of their GameStop puts, increased their amount of GameStop calls, and their amount of GameStop shares, it's pretty interesting, right? And then when you see them say something such as this, as they just said, and it appeared on CNBC on Friday, I saw a couple images floating across Reddit where they put this exact quote, right? It wasn't in regards to exactly GameStop. They were talking about short selling in general. But when you see a stock like GameStop that's gone through what it has this year and maybe, just maybe, has hidden short interest, and they say something like this, and they're long on GameStop, maybe they're referencing, right? Just maybe. So here's what they said. For short selling campaigns to succeed, there have to be positioning, liquidity, and often systematic amplifiers of the sell-off, Kolanovic wrote. We believe these conditions are not met, and hence this market episode may end up in a short squeeze and a clinical rally into year-end and January. Talking about a short squeeze, right? On only the most shorted stock of all time. And they have a net long position, a completely net long position, no short position at all from what I can understand. If I'm wrong, please correct me in the comments. So it seems as if JPMorgan is positioned on the side of the longs for GME, right? And then when they come out and say something like this, it's interesting. And then to theorize a little bit more, a little bit further, and you see a lot of other firms actually selling a lot of their shares right now, like these smaller firms, smaller funds, that no one really knows too much about, not really any big names. Besides BlackRock, they're selling a lot of shares, right? It makes me wonder, is this all for DRS, computer share? Are these shares being sold off in one place to be bought back for whatever synthetic shares are out there? Maybe, just maybe, if there are synthetic shares out there, and then they get DRS to computer share, a fund has to sell off the share. So computer share, the broker of the respect, so let's say it's Fidelity, let's say they don't have the shares, just maybe, they got to go and say, hey, whatever fund, BlackRock, let's just say, can you sell some shares so we can buy a real one and send it to computer share because we have to register it in their name now. So, and when GameStop confirms on their earnings report the amount of shares registered in their direct registrar, 5.2 million, and that was of October 30th. That's almost 2 months ago already. I know myself and a lot more individuals that have DRS to computer share since then. So it's going to be interesting to see what the amount of shares is on computer share for GameStop in their next earnings report. I'm betting they include it. Why would they not if they include it in the most previous one? Not to mention that Ryan Cohen Ventures already owns 12.9% of the shares, right? If that's not even, so when you're looking at locking the float or the maximum amount of people holding GameStop, right? Or like where we actually get a count or we realize how many shares is when all of shares that should be in existence for GameStop, I'm only talking like the only ones you should, so there's about 75 million outstanding, right? We know Ryan Cohen owns about 12.9% of that, if I'm not mistaken, maybe somewhere closer to 10%. Of course, there's other insiders and, there are the longs like JPMorgan, but you can never truly know on those when you're looking at the float and being control retail. You only know Ryan Cohen Ventures is not selling. To me, that's the most certain one. And then when you look at some players like JPMorgan, it's interesting. So it's really going to be interesting to see how it plays out. Again, not financial advice, thoughts and opinions only. Have a great day.